As promised, I'm back. So as you guys start to filter back in here, I'm going to start with these Reddit questions that I had from this past week. Let's see here. Actually, I'll give you guys a minute or so because one of these is quite entertaining. So I'm pretty sure somebody's going to want to listen to this one. So sit back, relax, be a minute or two. When you guys roll in, please let me know you're here. Here we go. Oliver coming in first this week. Jesus, that's a first. Jet fuel, second, unfortunately. Yeah, guys, so we have, I guess, two Reddit questions. Both are quite interesting, I think, and deserve an answer. So I'm going to start with those. I guess everybody can come back and watch the playback. So I'm gonna start with those, and then obviously move on to just any questions that may come in while I'm sitting here. Try to limit this to about 30 minutes. If questions keep rolling in, well, I'll keep answering them. So I don't know when these came in exactly. They did come through our Reddit kind of Ask Me Anything threads. They could have been from last week or the week before. First one comes from, sorry, Stubble and Stout, yeah. The first one comes from Nim Chimsky. It says, community-owned swap protocols are literally taking all the fees and liquidity from centralized exchanges. That's centralized with an S, so we can assume this guy's from the UK, or at least when he studied English, he took whatever, UK English over US. I've sold my XCM. Why was it a mistake? So asking me why selling his XCM was, I guess, potentially a mistake because according to him, or her, I guess, community-owned swap protocols, like, well, community-owned, I guess I don't know if they're all community-owned, but are taking all the fees and liquidity. So I think there's, if people coming into this industry now on the back of a lot of these Ponzi schemes that people like to call food tokens, I think have a twisted view of exactly where the benefit lies in the entirety of digitalization and in the entirety of crypto. I get the lure of a decentralized marketplace. I get it. And I do think decentralization is going to hold a piece of traditional finance in the future. Traditional finance will decentralize itself, disintermediate itself, because it has to. Because one of the reasons why centralized finance, if that's what we want to call it now, I'm still going to call it traditional because I think centralized finance is kind of it's just a misnomer in many ways, but it's also just redundant. Finance is centralized. So, and that's why decentralized finance is also a bit of a misnomer because you can't decentralize finance. I'll explain that in a bit. But in terms of what was said here, I get it. The problem is that when you look at regulation, when you look the entirety of the financial marketplace globally, built on a regulated financial marketplace, is built on one thing, literally one thing, and that's called trust. Now, that trust has been broken many times throughout the history of regulated finance, but that is the core on how finance is structured. I'll give you an example. I've talked about this more than once, but for the benefit of this question, we're talking about a gatekeeper system. Finance, the financial markets work in a way that there are gatekeepers. There is this circle of outside of the markets. Those are banks. Those are, let's say, e-money, electronic money operators. They are money transfer institutes. They are anything that basically touches the financial marketplace. As an individual, for you to gain access to move money, to be able to transact in the market, you have to go through a gatekeeper. You have to get identified at a bank or at a money transfer agent, whatever, to be able to transact inside of that global marketplace. That's always the way it's been. Now we're starting to create these systems that say these systems are trustless and there should be no reason why you need to interact with anyone or tell anybody who you are. And from a very, very high level, I tend to agree with that, in that I like privacy and I'd love to live in a world where I can do whatever I want with my money and no one can tell me otherwise. Unfortunately, that fucking world doesn't exist. So sometimes you got to put what I like to call your realist hat on. And you can see what's happening up here. And essentially that's happened because I've been wearing a realist hat for the past 20 years. And when you wear a hat for 20 years, your hair falls out. So boom, right? So put on your realist hat and understand that you don't have 15, 20-year-olds sitting in an office at the regulator going, bro, this is so awesome, we should just let this ride. This is so cool. Like, these guys are innovating. That shit doesn't happen. What you have is a bunch of older, somewhat fatter, probably balder than I am, dudes, for the most part, that sit around the regulators, at the regulator table, and they say, there's too much risk. How do we know? We need to stop this. We need to stop that. These are the old tools with how we use. How do we apply these old tools to this new market, et cetera? And then you start to have issues. So when it comes to the risk of money laundering and the risk of money traveling between hands of terrorists and all this stuff, that risk becomes extremely heightened when there are no gatekeepers. So this utopia we're currently living in of, being able to go on a Uniswap and post liquidity and make money from that liquidity, basically facilitate a transaction by way of a smart contract, but facilitate it using our funds and then being remunerated for that, I would say is essentially illegal when it comes to most regulation in the world. Now, decentralizing and making the actual transaction peer-to-peer through a smart contract is smart because it takes away a lot of that regulation. But the fact that you're putting up the capital to facilitate the transaction links you to that transaction. That's a problem. So look, even if the regulatory side wasn't an issue, there are pros and cons to both centralized and decentralized. Again, back to the regulatory angle, when it comes to KYC, when it comes to governance, it's going to be very difficult for that to be a thing that gets accepted by global regulators. And that's one thing. Again, back on the other side of the bubble, when we talk about what are the pros and cons, right now there are decentralized exchanges that are thinking about maybe doing non-custodial and centralized order books. That's like something like IDEX. And you know what? Every centralized exchange will end up doing the same thing. Non-custodial will be a thing. Non-custodial has been a thing in traditional markets for fucking 50 years, guys. On the FX side, you can do tripartite agreements between liquidity providers and between your own bank and not have to move your money into the brokerage's account. That's existed forever. And that's going to exist in a more technical way, in a more digital way, on all centralized exchanges. Centralized exchanges have the ability, because of that centralized order book, to create massive more amounts of throughput than any node-based system would be able to create using current technology. So when it comes to a high-frequency trader or any type of real volume traders, especially those that need to cater to a specific order type, that want to use more traditional like fixed order types, that don't want to have to worry about WebSockets, that don't want to have to worry about APIs built on REST, et cetera, are going to go the centralized route. When it comes to newbies that come into the market that don't understand how to use MetaMask, it becomes an extreme risk to their capital to have to go through those steps because they don't understand them. They get phished. I've known very smart people to get phished through Uniswap. And that's not going to change because right now the lure of those exchanges is the techie guys and the geeky people like those things because they feel that they're kind of running their own universe. But most people aren't techie guys or techie people that like those type of things. It becomes too much of a burden. And the only real way to reduce that burden is centralization to a large extent. So I think that there is a history for decentralized finance. I think what's currently going on in the market is a meme. It's a joke. The percentages that are being paid, at one point, the demand for the interest is going to outweigh the ability to create that interest. And that's going to happen relatively soon. And that means that those rates are going to crash. That means that the gamblers that are right now really pumping the liquidity through these decentralized exchanges, specifically because there's no governance and anything can get listed, et cetera, is going to wane. And eventually you will see an ebb and flow back towards centralized exchanges. It's not because it's my opinion. It's basically just based on history. Not that we've seen complete decentralization in financial markets before, but we have seen products that have brought some innovation to where you could have a more kind of billboard type market where you could deal person to person. What happens with billboard markets? Ask anybody in any small equities market around the world. They don't work. So anyway, that's my long answer. So why is selling XCM a mistake? Jesus, I went way off on a tangent on this one. Potentially it's a mistake because I think that centralized exchanges will still garner market. I think we're in a great position that we've built a very stable structure. And we're about to get into a point where we're going to start to see more and more large exchanges. You see what happens with BitThumb right now. You're going to start to see more and more large exchanges start to get a lot of pressure from the regulatory side. We've already done all that. We've been through that. We know what it's like, and we can deal with it. We have experience in it. It's not something that's going to slow us down. Our products are already built to adhere to those specs, to those regulatory specs. So I think we're generally in a very good time frame in order to start and see some major growth. And we might have done it backwards to everybody else, which means we didn't go out and try to make a ton of money and do everything the wrong way and then try to go back and fix it. But I think when you look long term, especially on huge multinational companies, generally the way we've done it is what works. It might not bring you, the billions quick, but it brings you the trillions slow. And I think that's essentially where we're sitting. So that's it. What we're missing right now is awareness. And it's not that difficult to create awareness. But, we're doing it in the way we feel that's apt to our business. And we're right at this, kind of cusp where I think you sold probably at the worst moment. If we were to step back and look at a more like a macro view of the first 3 years of CoinMetro and the next 10, like let's say 20. So you look at its 20-year time frame and you go to the third year, you're probably on that chart a very small, a centimeter basically before you start to see major growth. So that's obviously that's my opinion, but there you go. And the second one that we got on Reddit. Now this one made me laugh. I'd like to get some opinions from this one from you guys, but here we go. I'm going to read this one. It's a bit lengthy, but here we go. This is from Neurodawn. Hey, any plans to modify the logo and the UI UX of the site? It's pretty bad. The logo is too complex and ugly, and the color palette is ugly. Just a review to help you grow. I'm 100% serious. I really appreciate your work, but the UI is the first thing you see when you discover CoinMetro. The fonts, I'm reading it like this because there's no periods, just so you know. The first thing when you discover CoinMetro, the fonts are childish, the fade between page changes are horrible, the whole site is childish and unprofessional, period. Whew. I have no doubt that the back end is great. I don't know why he wouldn't doubt that. I mean, if our front end is so terrible, the back end should be absolute shit, I would imagine. I have no doubt that the back end is great, but the front end is not, and it's not very appealing. It sounds like you're taking your future customers for babies who want to go into the crypto business, but new potential customers just want quality, professional looking platforms in which they can trust. Posting it again because you didn't answer the Reddit questions in the last AMA. Okay, so I missed it, didn't miss it on purpose. I love answering these questions, to be honest. These are one of my favorite questions to answer. So let me break this down. So it's funny that, I guess you should have looked at our UI UX like 2 years ago, man. Then you would have had a great time. And super long run-on sentences with 45 commas, because there would have been much more to say, I think. So let me break this down. So I think, look, and every human being runs into this same issue. And I think, you're saying that we're looking for babies. And then I guess your idea is that most people that get into crypto, which I assume you're kind of assuming that most people are, I guess, like you perceive yourself. So you're perceiving yourself as basically a professional kind of crypto trader who wants a professional looking platform. That's how you depict yourself, and you're projecting that on everybody else. So let me tell you what the percentage are, and I don't think that, to me, the term crypto trader, I'm going to use the word misnomer again. It's like my word of the week. I feel like Pee Wee Herman. Everybody watch Pee Wee Herman's Playhouse when they were a kid? It's a long fucking time ago. But anyway, I think our word of the day is misnomer. So anyway, it's a misnomer because there's no such thing as crypto traders. There's guys that buy and hold, and then there's dudes that use simplified technical analysis. And because everybody else is retail in the market, they all use the same simplified technical analysis. And that means usually it works out. But that doesn't make you a trader. So anyway, so the amount of traders that exist in the world is less than probably 1/10 of 1% of the population. The amount of crypto traders that exist in the world is even less. So your advice is telling us to build something that attracts professional crypto traders, in your opinion, Neurodawn. When that is, you could fit, if the entire world's population was the size of Estonia, the amount of people that I would consider to be professional traders, or even professional retail traders, would fit into a thumbtack sitting on my balcony in my apartment in Tallinn. I don't think that's a good business approach. On top of that, I would say that I've never seen a professional looking crypto platform. I've seen platforms built copying or actually using white labels built on the back of FX trading platforms. And I don't know why that is, Because the vast majority of crypto people buy and hold. Why would you build platforms only for people to buy and hold? Why would you copy a platform built for someone who's technically savvy enough to understand the intricacies of trading for a group of people who do not use those tool sets? Why would you copy someone else just because it seems to work? Just because everybody else does something. This is like what your mother would tell you when you were like 15, right? And she caught you like, I don't know, drinking wine for the first time in your basement. And she goes, if your friends jumped off a bridge, would you? And you go, oh. Well, it's the same thing here, right? So everybody doing something doesn't necessarily mean they're doing it the right way. Look at the size of the crypto market in comparative to any other market. It's extremely small. Does that mean everything that's being done in crypto right now is correct and we just haven't yet hit that adoption moment? Or does it mean that most of the things done in crypto are absolutely wrong and no one's figured out the right way to do it yet? So I think there's a lot of things that come from our decision to do what we do and how we do it based on the fact that the crypto ecosystem is extremely immature and it doesn't yet suit the needs of even a small fraction of the populace. I would say that, the fonts we use, because you mentioned about fonts, are standard Google fonts. In fact, they're very similar to the fonts used by pretty much every platform out there, including traditional market platforms. As far as you say the logo is complex. I mean, it's a train in a circle. I don't know. I mean, I guess that could be considered complex. I think for now, for us, the logo stays. That doesn't mean the logo might change over time. Why not? I think definitely for XCM itself, the token, that logo is probably not going to change. And it's very similar to, this thing you see behind me here. Just doesn't have that extra circle around it. But there's potential, it may change. I think the color palette, we just went through a big exercise to change the color palette actually. And I think it works. In fact, we use a similar color palette to probably 75% of fintech businesses online. That doesn't mean we use the exact same colors, but the palette in terms of tonality is pretty similar. And I think from the most part, when people our rate of people actually hitting the new website and actually going through and giving us their email and becoming a client is quite high. In fact, it's right around industry standard, and in some aspect, it's even higher. So I would say that most people don't agree with what you're saying here, though I appreciate the comment. I appreciate the time to send it. And I'm glad that you appreciate what we're doing. And I think you need to appreciate the fact that what you like isn't necessarily what everybody likes. And I think that's something it's hard for anybody to discover that. It's hard for me to do it as well. You get into a position where you don't like something and thus you think it doesn't work. But that's usually not the case. I'll leave you with one last thought, which is a saying that I love to say. I just said it in the office about 20 minutes ago. So, opinions are like assholes. Everybody's got one. And that's essentially what it boils down to. That doesn't mean opinions aren't valued, but at the end of the day, when it's one opinion versus 50 opinions, or 10 versus 1,000, or 100 versus whatever, you go with the majority. That's it. Sometimes you don't even like the decision, to be honest, but that's how it works. All right, so let's move on to, I literally took more time than I wanted to take on the entirety of the AMA almost. So anyway, here we go. All right, so first question I see up here, Jet Fuel. Hey, Kev, you talked previously about how crypto is hype-driven. Will creating hype be part of upcoming marketing? Marketing is about hype at the end of the day. So yeah, nobody really pushes out marketing that says, you should try CoinMetro because, it's okay. Or, get into crypto because, why not? I mean, so yeah, there's definitely going to be hype around marketing. I think there's a difference between marketing the platform, the way the platform and the services are marketed, versus how something like XCM can be marketed on a community or on a social media level. Because there's a difference between hype around a token and hype around a product. So hype around the product can simply be touting its services and its pros and its cons and comparing it to other exchanges, et cetera, other service providers. And hype around a token is generally community driven. And that's something that the affiliates can definitely do to their heart's extent to hype up the value of the token. And that can be actually much more powerful in terms of hype to drive volume. But I think, yes, there's always going to be hype driven marketing. I think if you do marketing without hype or without any type of FOMO, you're probably not doing all that great marketing. That's just the way it is. Oh, thank Jet Fuel. On marketing, are you waiting for the CM bond and USD? No, well, we're in the process of putting together from several fronts. And that includes from the Ignium side as well, marketing specifically about the digital securities marketplace. And there's a few interviews that are mulling around that will be coming out as well that have to do with digital securities marketplace. And then there's some additional PR that's going to come out about other things that have happened with the company in Estonia and other things that are happening with product development, et cetera. And we're also working on a few strategies for different ways to create additional hype and additional awareness, something like we did with those 5 and 10 euro promotions and with the Parsec promotion. So there's many things that are being worked on, and there is, we've been kind of back and forth for quite some time now on these testing of different ad types on Facebook and Twitter, et cetera. There's certain things we just can't advertise. There's certain things we can advertise. There's certain markets we can't advertise in. So it takes a bit of time to figure out what works and where it works, but that's ongoing. And so it's not that we're waiting, but you will definitely see as we get through the security marketplace, as we get more through the issuance for tangible, as we get closer to the issuance for CoinMetro's bond, you're going to see more and more specific advertising for that product set. Can you talk about the plans you have for the money from the CoinMetro bond? Sure. So if you guys recall, when we were in our last, in the current funding round, because we haven't closed the round officially, we were looking to raise 5 million euro. We ended up finding a great group of investors out of the US that included a small fund plus several individuals that were involved in that fund that put together 1.44, I think, million euros. And that was in November last year, late November. And so we still have 3.5 roughly million, 3.56, I guess, if you want to be 100% accurate, million euro on the table that we still were looking to raise. And those funds were supposed to be allocated toward marketing, for one, acquiring of licensing, mainly MTF licensing in the EU, more than likely in Estonia, but potentially could be another jurisdiction as well. EMI licensing, probably agent to begin with, which we've already kind of started the process on, I shouldn't say kind of, we've already started the process on. And also kind of looking to establish ourselves in different regions, whether that be with a license or without, and also research and development, product development, and operations. So with the goal with that 5 million, when we extracted the money needed for the licensing, when we extracted the marketing budget, et cetera, would give us enough runway to get us to a point where we're self-sustainable and or profitable. And that's still relatively the plan. Now, we couldn't raise the 3.56 in the bond because of safe haven rules in the EU. We were limited to 2.5. But that doesn't mean that on the back of the bond, we may not have a secondary equity round or a equity round that runs parallel. Because we have had questions about that, because several of the funds and other investors that we've talked to, even since the beginning of this funding round last year, have gotten back in touch with us when they saw actually the filing for the SEC for the CoinMetro bond, to understand if we were still looking for specific equity or was bond only, et cetera. So we may still look to raise the full 3.56, but that 2.5 will essentially be used in the same fashion. We will simply cut off a little bit from each budget. So there'll be a little less on marketing, but most marketing budget probably won't be affected the most. The licensing budget will be affected. So instead of going after a full EMI license, we will stick to the agent license in this current round, which will still give us the same abilities. It'll just be underneath someone else's license. But the MTF license will still be included, because I think that's probably the most important licensing effort that we're going to do in the medium to short to medium term. And operational costs generally will remain the same. So we'll cut a bit from probably some of the auxiliary, maybe product development or expanding on development team, et cetera. We've already expanded the development team, so we did have plans to expand it a bit more, but that'll probably be cut back a bit. But generally speaking, we won't make any significant cuts to our current operations. We just won't make any significant additions either. But I think as we've seen when we got the last capital infusion, the current structure, aside from potentially bringing on some more people in support, compliance, et cetera, can make things happen and can make it work. So, all right, give me 1 second, guys, while I scroll here. This mouse has been not cooperating as of late. Oh, repeat. Okay, this is from Brian. Kevin, you once said that CoinMetro has to find its thing, like exchange allow 100% leverage, but maybe we just have to wait for regulation to kick in. Well, we're definitely not going to sit around and wait. Regulation around the world. You've seen these leaked documents from the EU about some type of collective regulation, some type of EU-wide directive, and that's probably going to happen. But that's not going to happen. I mean, look, think about MiFID II, think about MiFID III that's been being written now since, I don't know what it was, 2012 or something. Think about even the famous, any directive, to be honest, any directive, any financial directive that comes out of the EU takes 5 to 7 years to put together. So I wouldn't expect anything that fast from that directive. But we are going to see strengthening localized regulation, as we've seen in Estonia, across many parts of the world. And that's going to help us for sure, and definitely things like South Korea and people and more, especially from the money laundering side, kind of putting in their claws into some of these other businesses is going to help. But we're not going to wait. It definitely will help us, but I don't think that's generally the strategy. It doesn't. I mean, when you sit back and think, even businesses outside of crypto, just think of what made a business successful. When you think about any business, literally, think about Apple. Apple's a good example. Apple built computers that were pretty much in the first computers that any school bought back in the 80s were Apples, from Macintosh Apples, right? Macintosh or Apple, both, because they were sturdy, they worked well, et cetera. And that's still kind of the case, good materials, et cetera. But the company didn't really start making money until they created a phone. So that's when they became big. On the back of the iPhone, Apple became a powerhouse. Before that, they had very little market share. They were a niche company that made some money. And now they're a powerhouse. And it wasn't because of computers. It was because of a phone. And generally not even the phone. It's the store. It's the app store that basically made them who they are today. And so it doesn't need to be something so ridiculous or crazy. We don't need to reinvent the wheel. In fact, we're never going to know, unfortunately, what that thing is. It's about creating products that we feel are underserved or don't exist, or taking a product that already exists and giving it to our clients in just a nicer box. And I think for the most part, we've done a lot of that. What we don't have. Now, what my story was about Bitfinex coming out with 100x, going from $2,000 a day volume to billions. And they did it at a time when there was lots of eyes on crypto, and all of a sudden they were able to get the awareness. If they didn't get the awareness, they would still be doing $2,000 a day in volume at 100x. Well, maybe they'd be doing 200,000, right? But they wouldn't be doing substantial volume. So it's also about timing, and it's about luck, and all those things play a role. So for us, it's about making sure we continue to develop new products, we continue to innovate, we continue to take your guys' ideas and everything that you give to us in terms of feedback, and we try to find the best way forward and try to find things that we feel will work. And eventually, we will find that thing. That thing can be something we've already done that simply isn't made aware yet to the public. So it simply could be a marketing campaign around that thing, right? It could be Tram. It could be the dashboard widget. It could simply be a compliant exchange where someone can actually transact and not worry about the tax authority coming after them, or the exchange getting shut down and their money stolen. It could be, it could be a myriad of things. It could be the securities marketplace. Why not? It could be many things that we've already done. So it's not necessarily about us trying to dig through a haystack to find, the needle to understand what that thing is. It's just about creating new products and creating things that people will use, and getting feedback and bettering those things. And I'm pretty sure even on the BitMEX side, whether it was internal or whether it was external, somebody just said, well, what if we provide leverage? And somebody else said, yeah, let's give it a shot. That's it. It's as simple as that. Any updates on alternative payments for the CM shop? No update. Unfortunately, since getting back, I've been quite busy. And then my sleep schedule is all weird because I'm still kind of jet lagged. So it's getting it's hard for me to fall asleep in the evening, and then waking up in the morning is a bit of a pain. So I'm still trying to adjust, but I'm assuming I'm going to be able to clear off most of what's pending on my plate, at least what's pending from before, in the next week or so. And then hopefully I'll have some time to have a look. Look, if you're really jonesing, man, for that T-shirt, just go ahead and DM me on Telegram at Kevin MURCKO. Let me know what you want, and we'll work it out. Yeah. Do you think adding USD in this month will make CM rise in price? I know for a fact that adding USD is going to bring us some additional volumes that come from some of our stakeholders. I think it's also going to bring us some additional volumes from current CoinMetro clients that trade US price pairs elsewhere. Additional volume should stabilize and bring XCM price back up to recent highs and potentially new highs. So yes, I think that's potentially possible. I think the USD thing has been something that we need. Although at the same time, if there was enough awareness that we have a SEPA on-ramp in the EU with Euro pairs, we would probably have significantly more volume. So again, it comes back to awareness thing. But yes, I do think USD will have a direct correlation to demand on XCM because XCM has a direct correlation to volume on the exchange. Hey Kev, what are the USD GBP pairings for the most popular currencies on when? So GBP, I think we have, what do we have? I know we have Bitcoin. I think we have Ether as well. Maybe we don't. I think we have Ether and Bitcoin right now. So as far as, I guess it comes from a new iteration of the markets page, which is going to come out sometime in Q4, will actually have the ability for you guys to vote. We will list a bunch of pairings, both pairings and assets, and ask everybody to vote. And based on voting, we will add those. So I'm not saying it'll take till then, but on USD, we're probably going to try to list almost everything, though it might not happen day one. But I think, you're definitely going to get your majors listed immediately because we have access to liquidity on those. In terms of your non-majors, your let's say major alts like Chainlink that have liquidity elsewhere, for example, we'll probably get USD listings quite quickly. XCM might have to do a hybrid book between Euro at first, but we'll see how the flow looks, and then eventually have its own USD book. So I would say when USD comes along, you're probably going to see a lot of USD pairings. As far as pounds go, we're really waiting on feedback to find out what people want to see. Q4 is almost upon us for 2020. What do you want to see the most for CM? Well, we just had a meeting actually right before I got on the news, which is why I was a bit late, which was going over Q4 roadmap. So I'm going to save the unveiling of that for Oliver. It'll probably come out sometime next week, I imagine, towards the end of the week, maybe sooner, about what that Q4 roadmap is going to look like. There's a few interesting things on there, and I think there's a few things that we haven't added yet that we're still kind of back and forth to see how we're going to implement them. But there's a few cool things coming out, as well as some additional refinements to the overall platform. Non-custodial like Nash, heard a lot of them bashing on CM, but had a look recently. Doesn't look like they made any improvements. Yeah, I think Nash is a joke. So, I mean, it's clear that just from the way, just from the small amount that I've interacted with whoever that was from their company, I can tell you that there's no real future there. And I can tell you that not because they might not be smart and they might not be, well, they're definitely not articulate. I was going to say articulate. I don't know why. They're definitely not articulate. But it's not because they're not smart and they may not understand what they're doing in product and all this great stuff. Great. But when you move into the financial space, unfortunately, even if you're the most intelligent guy in the room, but you're under a certain age, when you do have to go in front, you notice would they make this comment about the Netherlands regulator that they decided to go no KYC and get out of the Netherlands, or not go after the Netherlands license because it was too hard and because they asked for too much stuff and because it costs too much money? That is the most ridiculous amount of nonsense I've ever heard. And with that type of stance, I can guarantee you that the future is glim. Regardless if they make a fantastic product and they get all this kind of volume right away, whatever, eventually the future is going to be grim, because that type of mindset doesn't work when you're dealing with other people's money. That's just the way it is. So non-custodial, I had a discussion with Ledger, or tried to have a discussion with Ledger back in 2017. And I said, hey, Ledger. It wasn't, maybe, I don't know if I said, hey, Ledger, but basically I said, hey, Ledger, check it out. Why don't you guys build a system so that we can do non-custodial deposits, so that deposits can sit on Ledger, not move, and then basically the funds can be locked. So we get permission to lock the funds as the transactions happen. Once they happen, we net and settle between CoinMetro's Omnibus account and the Ledger wallet. And I quote, this is not perfect quotation, but basically what I was told was, we don't see a need for that in the current market. So basically at that point, I thought Ledger was retarded. I know people don't like to use that word anymore, but I'm 42, so it was retarded. And it just didn't make any sense. I didn't understand how a company that provides the service they provide would not be interested in non-custodial deposits in centralized exchanges. It's a huge business, man. By itself, it's huge. So yes, non-custodial, meaning that you would be able to have your assets sitting in a wallet you control, and still be able to transact on our centralized order book, and then simply settle with us when the transaction is over. That's what I mean. Okay, let's see. Oliver, hey Kevin, can we expect some ERC20 DeFi tokens soon? Oh, already got some DEXed, but only available on Uniswap or shitty exchanges. Might be a good idea to list some hype coins. I can see how it potentially could be a good idea in the short term because people may come. But first of all, one, a lot of those tokens we couldn't list because of regulatory issues, because many of them would be considered derivatives. Something like sushi, for example, the sushi swap token is a derivative. So couldn't list it. Listing those things, where do we get the liquidity from? We don't have the current user base that would provide all the liquidity. The user base from Uniswap is pretty much brainwashed to think that Uniswap is like the best thing since sliced bread and it's going to take over the world. So they don't generally migrate over to anywhere else either, unless they simply have an arbitrage opportunity. Even then, a majority of those guys don't want to do KYC. That's why they end up on Uniswap. So there's a bit of I think, I want to get into DeFi, not into current DeFi for the most part, but I want to get into DeFi. I think it is a piece of, like I said, of the future. But I think listing those tokens may end up proving to be more problems than it is good for us. We are a regulated company, and we're very vocal about that. And I can't do what CZ does. I can't list shit that I know is going to blow up just to try to make money on the back of my clients. It's just not something we can do. It's not something I would do anyway. I think morally speaking, it's just more corrupt than I'm willing to go. My corrupt level is close to zero, right? I mean, obviously, look, I'll be honest with you guys. Sometimes in business, there's a point where you need to do something that might not make you entirely comfortable, but there are certain risks companies need to take. But risk level for a regulated entity cannot be high. It can't be medium. It has to be low. So in that line, I think it's difficult for us to go down that road. I do think eventually there will be legitimate DeFi companies where we can create like an ETCF, like an ETF structure off those DeFi entities. There may even, we have ideas to even do something like this, Binance liquidity pool. There's an idea that maybe we could do. We have KYC clients that want to put up liquidity, basically lending, like our margin lending platform, which we don't call margin lending, obviously, because it's not lending, but just so that you guys understand what I'm talking about. So we could potentially do something similar in the future, and that may allow us then to list certain things in a more decentralized manner, but at the same time, it's still connected to CoinMetro itself, the licensed entity. So it's not that easy, unfortunately. And even though it may bring us temporary hype, I think it brings us long-term issues. When can we expect new coin listings? I think coming through USD. So towards the end of this month, now that we have the first issuance and the CoinMetro bond then coming online, I think you'll start to see some new issuances. We did bring out a couple new issuances, obviously. So we have Tezos and USDC. Everybody saw those. And we had a few more in line, but we had to get focused on the digital marketplace and then obviously USD. So as USD comes out, after USD comes out, and especially once that new markets page comes out in the middle of Q4, where then we can actually do some voting and figure out exactly what people want to see in the platform. When Binance fall, how, in your opinion, will it affect the market? Also, when they pull the trigger, it will be in one day, like exit scam, or will it take a long process? Well, it depends on how that were potentially to play out. So if the FBI shuts down their website and there's a big symbol on their website that says Binance.com has been seized, which is a potential outcome, then Binance may try to get whatever, the new Binance.com or Binance.org or whatever, and try to play a little regulatory arbitrage. But I do think even Binance at some point would probably not attempt to do that, and may at that point attempt to go into liquidation so that they don't get into further issues or further trouble. There's also the idea that potentially they could see the writing on the wall potentially there could be some pending litigation, and they simply decide to turn things off themselves and do a runner. If they did a runner and stole the money, which, look, I don't like Binance. I think I made that kind of abundantly clear over the years. I think they do everything wrong. I think they're terrible for the industry. And I think CZ has no idea what he's doing. I think he's a front man. I think he's probably connected to the Chinese government. And I think that's why they've been able to last so long. I think he's a shill, to be quite honest. But outside of all that, I don't think Binance would pull a runner where they run away with funds. I don't see that happen. I don't see that in my crystal ball. If that were to happen, though, that would be a catastrophe, because obviously there's a huge amount of liquidity locked in Binance. And if that were to just go off the map, we would see a potential serious pivot in price, probably for months on end. And it potentially could harm the overall trust of the entirety of the crypto industry. It would take time to rebuild that trust. And I think over time, the market would become much more stable as a result. But because many crypto traders have the wool over their eyes, and they think Binance is, the best thing out there, Binance scamming them would completely destroy their trust, even in much more trusted properties in crypto. So again, I don't think that's the case. I think what generally happens is they get into legal issues, they go into liquidation themselves, they end up selling their assets to another company who filters, reopens, and basically gets the liquidity back, the legitimate liquidity back in the market. And we find out that daily volumes are only 245 million and not 2 billion. I think that's a much more plausible scenario. And I think that would have much less of effect on price. I think there would be some jitters. There would be a lot of nonsense on crypto Twitter for a few weeks. But I think generally speaking, it would be a much less impactful on price in the short term. Should the community increase Uniswap liquidity for XCM to increase the USD on-ramp traction end of the month? Blink twice for yes. I can answer this one, Oliver, so no problem. I think if anybody in the community wants to take the risk to put liquidity on Uniswap to potentially lose their XCM but gain some Ether, or potentially get more Ether, or potentially get more XCM and lose some Ether and potentially make some fees along the way, if they want to do it, I think they should go ahead and do it. We can't do it. Me saying that you can do it there's nothing wrong with that. You can go ahead and do it. In fact, I'm not against I think the idea of Uniswap is great. I think decentralization of finance is great. I think the idea is great. I just know that the practicalities of it, and when it comes to regulation, it's too early, too soon, and it's not going to work in the long run. That doesn't mean that decentralized protocols aren't going to work in the long run. I'm not saying that. What I'm saying is right now, I can't be the one that provides that liquidity. If there was some way for us to provide that, we already would have done it, because we wouldn't have been the ones to do it first. Because my mantra is CoinMetro is our utility token. It's useful on CoinMetro. There's no real reason outside of the fact that it's clear that I'm just trying to generate hype to put it anywhere else. But if it's already somewhere else and there's nothing I can do about it, why not provide liquidity? But I can't. So my answer to that is, it's everybody's decision. Would I be upset if I saw more liquidity on Uniswap? No, I wouldn't. I guess that's the best way I can summarize it. You said it's not that hard to create awareness, yet CM fails to create any. It's not that we fail to create any, Bjorn. It's that we haven't yet started to really create awareness. And a lot of that was due in the beginning to us building product. A lot of it's been due then to fine-tuning product. And a lot of it's been due to the fact that we haven't had the budget to really be able to create the awareness. A lot of it's also been due to the fact that our own affiliate program hasn't really taken off, because even our affiliates haven't been out there creating a large amount of work. There's definitely people in the community that go above and beyond, and applause to them and thank you and thank you and thank you. And I think there's no way for us to thank them enough for everything they do. And many of those guys are probably in this chat right now. But collectively, not all affiliates do that. So it's not about that we don't know how to create awareness. It's a simple awareness. Simply means people know you exist. That could be even bad advertising is awareness. The thing is that we haven't had all the pieces together, and we're getting very close. I would say if you talk about almost 3 years ago, we were like this. So we had pieces all around, but they weren't connected. And now we're right about here. So we're at the point where we're just about ready to lock all those pieces together and really be able to push. And obviously money, that is one piece. Getting the platform ready for an increase in scale is another. Getting enough awareness to the point where we are known for something. Maybe not by everyone, but when someone does enough research, they find out that we're the guys that, do things right, that we follow regulation, that we do this, that we do that, that we're vocal about it, et cetera. So we've been doing a lot of things the right way, but to create that awareness, it's not, something can be easy or something can be easy to do, but still difficult to accomplish. So, that's like, playing a sport is generally not difficult, but that doesn't mean you're going to become a professional athlete, right? Because there's a lot of things that need to align for that to happen. There's lots of things in life that are generally easy, but still difficult. So we've done a lot of those difficult tasks already, and now we're at the point where we're very close to the point where everything comes together, and that awareness then starts to become more and more, we start to become more and more seen, and that awareness grows. Are you bullish or bearish on BTC? Over a macro time period, long time period, I would be bullish on Bitcoin. I'm not a million per Bitcoin guy or even 100,000 per Bitcoin guy, to be honest, at least in the short term. But yeah, generally bullish. However, understand that collectively since the beginning of Bitcoin, we've been in a bullish cycle and have never exited it. But in terms of in the last 3 years, 2.5 years, we've been in a bear market, and we're still in that bear market. And until we see Bitcoin up again around probably the 16 to 20,000 mark, that's not going to change. So right now, I wouldn't say I'm overly bullish, but for long term, yeah. Look, you only have to look at a long-term chart to understand that. Whether we hit those all-time highs in a month, a year, or 10 years. We're still generally in a market that's going to appreciate. Considering the fact that, stock markets generally appreciate 8% a year on average, that's pretty simple for Bitcoin. In fact, Bitcoin should be able to double or triple that for the most part year on year pretty easily. But even if you think if it doubled it, if it did 20% a year, it's still going to take it another 5 or 6, 7 years to get back up to, somebody will do the math, but whatever, to get back up to its highs or surpass its highs. Not saying it's going to take that long, just giving you an example. Yeah, come on, guys, thumbs up, please, please, please. Show your love. It only helps us figure out what you guys like, create more content, gets us more awareness, right? Again, not that, it's pretty easy to click a button, but sometimes it can be real difficult, can't it? See, just proving my point. Kevin, when I was searching coins on CoinGecko, it automatically shows 7 most trending coins, which 4 of them were Y finance and 1 was yield farming. What is that saying about crypto users? It's saying that the recent influx of crypto users, look, the same guys, I'll even go further back. The same guys that are in yield farming are the same guys that pumped ICOs, are the same guys that pumped high yield investment products back in scams, basically back in the early 2000s and 90s, are the same guys that were probably, if they're old enough, or the same type of guys that were doing, those like send a self-addressed stamped envelope to find out how to make money from home in newspapers around the world. These are the same type of people. These people, for the most part, either understand that it's all scam, but they like fast money and they're gamblers, or they don't understand it and they think they're going to become millionaires overnight, and they get caught in the shuffle. And that's never going to change. That's essentially part of the human condition. And when yield farming is gone and DeFi transforms into a more mature market, we're going to have something else. Maybe it's even going to be outside crypto. Maybe it's going to be trading, carbon credits. There's going to be some major Ponzi's that pop up about that. There's always going to be something. So what it tells me is that we're still a very immature market. We have matured, but every time there's this new jump in ridiculousness, like food tokens, every time there's this jump in ridiculousness, we get a new wave and some of the old wave of ridiculous people looking for gains that aren't really possible in the real world. And, people are making money on DeFi, but the amount of money, people that make money versus the amount of people that lose it is extraordinarily divided. And so it just tells me that people are people, human beings are human beings. And that's not going to change. So again, same guys that took their probably mined Bitcoin and pushed it into micro caps to create FOMO and hype to make more money and to gamble with their Bitcoin or Ether are the same guys now that are doing this. In fact, I would assume most of these anonymous devs were the devs behind several failed ICOs. Because those guys, it's not like those guys do a scam and never scam again and go off onto an island and drink, umbrella drinks, in front of their mansion. Not really. They spend that money on, booze, coke, and whores, and then get broke again, and then come back and scam people again. That's generally how this works. And so you're just looking at the same thing all over again in a different box. Which is like saying the sky is blue. I don't know what that comment came from. I guess I'm a little behind the schedule here, Born, but cool. I mean, just look at us, still bag holding XCM after all this time. Yeah, well, I have to say XCM, well, look, I guess, again, most people that got into ICOs, a lot of them were thinking 10x, 100x, 5,000x, whatever, in a week. If you look at blue chip investments, stock investments, that is not the case. Generally speaking, you are happy with a very gradual return over time. For us, we've kind of delayed the start for quite some time to enable us to get a better jump once we actually really start the engines, like, my whole analogy before. So yeah, look, I think it can be frustrating to hold any investment, right? Especially when you're only looking at the short term. I think when you look at medium to long term, many of the things that are doing quite well now won't be here in the medium to long term. And many of the things that may have seemed to be struggling, that have been here since 2017, that have been building product, building community, building awareness, will end up becoming those that actually take over this market as it matures in the future. So, but yeah, look, bag holding anything can be difficult. That's just the way the market is. Is the iOS app still scheduled for the end of the month? It's a good question. We were just going over, I think it's been moved until, it moved into sometime into October, if I'm not mistaken. But yeah, we'll probably still see probably a sneak peek by the end of the month, rollout probably in October. Persistence is key. Never know where you're going. Yep, exactly. That's my point. Any more STOs? I've been on the phone now with 10 or 12 issuers. So yes, there's definitely more in the pipeline. From media companies to litigation finance to tokenized funds to Jesus, there was a few others now. That real estate. Major real estate developments. So there's several in the pipeline, and yes, there will definitely be more coming. That's for sure. Why isn't Shop available when I log into CoinMetro? Because we haven't linked the two yet. It was basically a side project that I took on, and then Daniel P, if he's here, he can stick his hand up. Actually helped me out with it at the end to get it live. So it's a completely separate little project right now. Eventually, it will be merged, but obviously, I'm sure you can see with the. And of course, you'll see the Q4 roadmap hopefully by the end of next week. But as you can see from previous roadmaps, we have a lot of stuff that we need to get done, and a lot of things that need to be prioritized. And the CM store isn't the highest priority. But the goal is probably into Q1, Q2 next year is to get it configured into the website, and also get it configured so that you can have pop-ups in the platform that say you've just traded your 10th trade, congratulations, trade another 10 trades within 30 days and get a free t-shirt, etc. So I think we're going to make it more interactive over time, but it can't be a priority right now because we have too many more important things that need to be accomplished before we do that. Best-selling item in the merch store, I'd have to look. Definitely it's going to be a t-shirt. I'm almost 100% sure, but I honestly, I don't know which one off the top of my head. I think this one actually I have on right now, the KYC one, is actually probably one of the better selling items for sure. How do we know our coins are safe on CoinMetro? Hey, Brent Star. So yeah, look, I'll start from the high end. You'll never know for sure, even in your own custody, that your assets are 100% safe, unfortunately. I think there's a myth out there that, not my keys, not my tokens or whatever, something like that. And that's a bit ridiculous, because at the end of the day, like I've talked about before, the learning curve for most people to be able to handle private and public keys and things like MetaMask and ledger wallets and hardware wallets and et cetera is so daunting that they actually have more risk on their shoulders that they might get phished, spoofed, or whatever, and lose access to those wallets than a company that has experience in doing so and also has staff that is trained to work with these type of infrastructures. So how do you know? Well, when it comes to the majority of the assets, which means every asset listed on the platform except for Quant and XCM at this point is all held in hot, cold, warm, and warm wallets with BitGo. If you don't know BitGo, look them up, bitgo.com. They are an institutional wallet provider that provide both cold and hot wallets and what we like to call warm wallets, which essentially are wallets that have protocols built, a software layer built on top of them that basically dictates where funds can move, whitelist and blacklist of addresses, if they can only receive, if wallets can only, or addresses can only receive or only send, et cetera. And that infrastructure is again powered by BitGo. BitGo has never had a hacking issue or any type of issue tied to BitGo. And we have very strict protocols on who can access. Our API is limited to what it can actually do. We have manual protocols in place as well for certain movements from certain wallets, and even movements from hot wallets that go over a certain amount, or not only just an amount, but also in velocity. So if there's a certain amount of transactions or anything else that gets picked up by algorithms, both on BitGo's side and our side, we will limit the ability for any automated movements, and even manual movements from inside BitGo would be limited. So that's one thing. On the other side, we have our own multi-sig Ether wallets that we built that are built on not only multi-sig, but also time locking. And it's built on a system, and the access is through MetaMask and hardware wallets combined. And the access is distributed to 4 different people who live on 3 different continents. So it's pretty secure. We also have fail-safes in place if 1 or 2 or more of those people were to become incapacitated, which also is only accessible by a certain few. And that information can only be garnered by the same people that have the other unfettered access. So anyway, the system is built as best that we can build it. We constantly look to make that system even more secure, even though it makes it less streamlined to a certain extent. Yeah, and we have guys on the team. Obviously, I come from an FX background, so I'm used to more from a traditional standpoint. But even from the traditional standpoint, we have a lot of safeguards in place, whether it comes from credit cards, whether it comes from fiat, et cetera, transactions, SEPA transfers, et cetera. We have a lot of 4i principles, and we have a lot of monitoring that happens both on the transaction side and as well just on both external transactions and internal transactions. So lots of protocols that we follow. And to be honest, most of the hacks you've seen aren't hacks. They're social engineering. And the social engineering happens because of a lack of protocols and a lack of adherence to protocols at these larger crypto exchanges. And we have very strict protocols that we follow. And the protocols are set in a way, for the most part on the technical side, they have to be followed, or you can't actually follow through with whatever transaction you're trying to approve. So many Ponzi schemes in DeFi. Yep, pretty much all of them. Is the tangible bond going as expected? It's been a couple of weeks. It hasn't been a couple of weeks. It was actually launched. It actually launched with 92 days worth of subscription period, which should only be 90, but we added 2 for testing. So really, since the official hard launch, it's been, I think, 4 days, 4 or 5 days, something like that. So it hasn't been a few weeks. That's inaccurate. And yes, 1%. So we still haven't gone out with the major PR releases from both Ignium and CoinMetro side. Those are coming. We have a 90-day subscription period. It is a bond. If Tangible gets to the point where it needs to raise additional funds, it releases another bond. Simple as that. It doesn't change anything in terms of the value of the initial bond, doesn't change the value of the site. It's not like a utility token where adding additional tokens will somehow dilute the price. That's not how it works. These are bond tokens. It's a completely different animal. So my point is to say that we haven't started the full advertising. It's coming, and it's only been about 5 days. So yes, it's a bit behind schedule if you divide 90 by 2.5 million. But in all aspects, it's moving as it should. Everything's working as it should. There's been a few pieces that we've been tweaking along the way as we see how the whole system interacts, and that comes from the tangible side, the Ignium side, and the CoinMetro side. But PR is coming both from tangible, paid PR, and also just wide-ranging PR, as well as from the CoinMetro side. So I'm gonna keep going here, guys. It's been over an hour now, but here we go. What do you think about TAP, which allows to us crypto with a MasterCard authorized and regulated? And would you have their coins on CM? Wait a minute. So I don't know about TAP. I'll just throw that out there, but it allows to us crypto with a MasterCard. Are you saying that it's a debit card that you can spend that attaches to your crypto balance? Or are you saying you can buy crypto with MasterCard? The latter, you can already do at CoinMetro. The former, you will be able to do at CoinMetro within the next, hopefully 90 days, as we're waiting on Visa, waiting on our banking as a service provider to actually get our card rolling through Visa. So would I have their coin on CoinMetro? Potentially, they would be a competitor in certain areas, but I do envision on our ETCF platform eventually having kind of like a broker or exchange ETCF, which would basically list a bunch of different tokens that do similar things to what we do, so that people can hedge their risk against CM and other exchange tokens. So it's potential. I'd have to dig in a bit more. You say they're authorized and regulated. I know a lot of throw those terms around though, and sometimes it's not the case. So I'll have a look. I haven't looked at TAP, so I'll have a look. But potentially, yeah. Are there many people waiting to onboard the platform once USD comes in? Well, I would say we know of a decent amount from one of our stakeholders. And one of our stakeholders has his own business with about 3,000 clients. I'm not saying all of them are waiting in the wings, but there is a percentage of them that have been waiting for USD to launch. And that's just one aspect. And we know of clients that have come in, even non-clients that have come in and requested USD. So there's definitely people that are waiting. And I think regardless, it opens up a much bigger market for us, which is never a bad thing. If I were to put a six-figure sum into the bond market, CM or tangible, are there any protections, guarantees against a default? No, there's never any protection against a default on any bond product. There are bond products that are structured in a way where if a default happens, that the bondholders have the right as creditor to be first in line to, let's say, an underlying property or something like that. These are uncollateralized bonds. So there's no collateral attached to the bond. Any bond can default, whether it's collateralized or not. But with a collateralized bond, doesn't mean you'll ever get, one-to-one back. You may never get anything back. You may get 10 cents on the dollar, for example. But with a non-collateralized bond, yeah, there's nothing that would stop the default, just like in a collateralized bond, but there's also nothing that would recoup automatically, let's say, your money. What I would say for what would potentially most likely happen in a default on either side would be an additional bond raise at a higher interest rate to basically pay back those original bondholders. That's usually what would happen with a legitimate company that has a default. But no, there's never any guarantee. That doesn't exist. So, have you heard of the new coin TTT? Dirty Gash. It's any good. You should. Josh, I'm thinking this is I think you're trolling me, but yeah, haven't heard of it, but I'm pretty sure it doesn't exist. So thanks. Hey guys, top sold T-shirt is I knew it. It's KYC one. Yeah, I've seen the orders pop up, so I assume. Thanks Daniel, appreciate that. You skipped my question. Well, what, Bjorn? Just post the question again, my friend. I mean, I'm looking at 100 questions here. Let's see. I answered that one. I'm trying to go back and find what I may have missed. But yeah, Bjorn, I don't see any question that I didn't answer. So post it again, my friend. All right, let's see. If something also happens to me, Bjorn, it's sometimes, okay. I don't see any question though from you. Maybe it just doesn't come up on the screen. Maybe there's an issue with the way these populate. I don't know, but I don't see any additional question from you, Bjorn, that I didn't address. Tap gives a MasterCard. You can use your card with fiat or crypto authorized and regulated in the EU with 100 million guarantee. All right, well, there's no way there's 100 million guarantee on the card. That wouldn't exist. They probably have their crypto assets sitting with, I would assume, Coinbase, who has 100 million policy, and they're saying that that policy is theirs. It's not, because if the same day that something happened to them, Coinbase had an issue and 99 million was claimed, they'd only have 1 million left. So like I said, that's why when you talk about authorized and regulated, make sure you read between the lines. Lots of companies use other people's products or offerings to make it seem like it's theirs, and they dilute or they inflate exactly what they're offering. I'd like to see where they're authorized and regulated. That would be interesting, because I assume my assumptions are running in my mind. But yes, we will be offering the same thing. So a Visa, not a MasterCard, that you can use with fiat or crypto, and that you can link to your account. And I almost guarantee our fees will probably be substantially less than Tap's without even knowing their fees, simply because we did a lot of research on fees. Appreciate that, Oliver. Yeah, that's definitely not their insurance policy. I can almost guarantee you that. There's only 2 or 3 entities in crypto that have a Lloyd's, and Lloyd's actually isn't the main underwriter. There's actually an underwriter below Lloyd's that does the crypto policies. That's part of Lloyd's insurance group. And that 100 million is going to be either Coinbase, it could be BitGo, could be Coinbase, and there's one other entity. I can't think of it off the top of my head, but they're also in the traditional space with custody. But that's it. So Tap doesn't have it. They're custodying crypto assets with somebody else and basically taking their policy and saying it's theirs. But again, it's a shared policy, which means if there is a claim of 99 million on the other side, you're only getting 1 million at Tap. Bjorn, I don't know. There's no deal, man. I literally went back and scrolled up. Every question you asked, I addressed that I can see. So maybe it just didn't come up. I don't know. Maybe you wrote something in that got blocked by a filter. I have no idea, but I don't see it. So DM me in Telegram if you want, or ask it quick, because as soon as I answer this last question, if another one doesn't come up, I'm out of here. So should I start planning for the €1 Talon party now or after USD? Yeah, start planning now, because it's going to be an epic party. So start planning now. Regardless how long it takes for us to get there. I think the longer it takes us to get there, the more epic the festivities will be, the longer planning it will need. So, yeah, I don't see any other question from you. I see this, and I see the weird comment, but the question doesn't seem to, and I don't have any filters set up or anything like that, so for some reason it's not coming up. I have no idea why. Is IOHK the company behind the Cardano, which are getting involved with ETC, a hedge to back a proof of work project in the hopes ETH has major issues going forward with proof of stake move? I guess you can glean that from the fact that they're partnering with Ethereum Classic, but that's as much as I can glean out of that. I think the rest of it, no, I wouldn't say it's a direct hedge. I think almost any platform that offers some type of smart contract or tokenization inside of their protocol is potentially a hedge against Ethereum, kind of dying. But at the same time, even Bitcoin is a decent hedge against that. So almost any major player in crypto would almost be a decent hedge, because you would have to assume if Ether started to really crumble, most of the funds that were pulled out of Ether would end up finding their way probably into Bitcoin for the most part. Unless there was some major move by another entity that had scaling and throughput and everything that could also do smart contracts and tokenization. So yeah. So potentially Cardano could be on the list. I'm not saying it isn't, but I don't think it's naturally the hedge just because that Ethereum Classic is kind of weaved in. Oliver said that you can't do Twitter ads, but I constantly see crypto ads on there. Yeah, I would, and Oliver's correct. We've been told by Twitter that we can't advertise on Twitter, even though we're a regulated entity. And I see scam ads on Twitter. I mean, look at Facebook. How many times have you seen that scam CoinMetro ad? Every comment, man. And they don't do anything about it. We report it and they're like, yeah, everything looks fine. So, it's frustrating as hell, to be quite honest. That's why sometimes doing things the right way, even though eventually leads to, I think, a much more stable and successful company, in the beginning can be such a frustrating experience. And this is just one of them. So Oliver's right. What Oliver says is 100% true. This is what we've been told. And we've been back and forth with them now a myriad of times, even through some of their resellers. One of their biggest resellers here in at least in the Baltics, if not in Europe. And same thing, we get the same response. But we're basically twiddling away, and eventually we will break through the madness. But I see the same thing, and we've told them the same thing. And essentially, the answer we get is something like, "Yeah, well, that's a different. It's a case-by-case basis," or something like that. Even though to us they say it's because of regulatory or rules, and then they say when they approve somebody else that it's due to a case-by-case basis. So there's definitely something going on, and some reason we don't understand. I think it's generally comes down to the fact that Twitter's process is either automatic, and once you get through the automatic process, it's manual and it's based on the person you're dealing with. So if you break through to somebody who understands and gets things done, it gets approved. If you break through to somebody after you get through all the bots that isn't someone that understands, it doesn't get approved. And then once it's not approved, somebody who does understand may see that it didn't get approved and assume it didn't get approved for a specific reason and doesn't approve it either. So it's just kind of calling up 500 times and eventually getting somebody that gets it and getting the approval done. So we've been in that process for some time, and we'll be in that process for some more time, I think. So there we go, guys. It's been an hour and 10 minutes. Thank you very much for waiting for me till Wednesday. I think it was a decent AMA. Thanks for the Reddit questions, by the way. Thank you, guys. You guys know you can always tag me on Telegram @KevinMurcko. You can tweet me on Twitter @KevinMurcko. You can pretty much get me anywhere @KevinMurcko. If you have a question, ask it. It doesn't necessarily need to be about CoinMetro. It doesn't even need to be about crypto in general. You want to ask me something, ask me. I'll try to answer it to the best of my ability. And yeah, be here on this coming Friday for the next AMA. Usually every Friday. Again, did it today because I missed last week. If you have a question and you can't make it, you can submit it on Reddit or tag it to somebody on Telegram and ask them to ask it for you. See you guys on Friday. I'm not going to say my normal speech that I usually say at the end of AMAs because it's not Friday, bro. So here we go. See you guys in 2 days, and tag me if you need something, and talk soon. Cheers.